Stock of the day, I thought we'd take a look at Costa Group, the big fruit, berry, vegetable wholesaler. Went into a trading halt ahead of a planned capital raise. The company seeking to raise $190 million to acquire 2PH Farms for roughly $200 million in cash. Comes as the group reports full-year earnings and profit expected to come in a tad ahead of calendar year 2020. Michael, what do you think of Costa Group and also the acquisition?
Well, the acquisition seems to be quite good in that it's EPS accretive, and that's one of the key things that the market looks for when these businesses take on these acquisitions. When it comes to Costa as a whole, it's not a bad quality company at all in its respective area, but as I'm sure you've heard me many times before, we tend to sort of steer clear of these cyclical type agribusiness businesses. It is a very hard and challenging environment to get right all the time for all your different categories. Yeah. Obviously currency comes into it, drought, etc., overseas markets and pricing. But the big thing for Costa is they are in some ways beholden to the big supermarkets, Coles and Woolworths. So they don't have that much.
They sort of provide, I was reading somewhere, virtually all the blueberries and strawberries to both Coles and Woolworths.
Yeah, so that's what I mean. It is a good business and there's definitely good parts to it. But as you can see from that chart, as you can see looking at the balance sheet, it is a very lumpy business, and there's definitely very good years followed by some very tough years. Yeah. So my concern, or what I find challenging, is how do you value something like that, which is so up and down and beholden to so many different interest parties and variables such as weather.
Right, okay. What do you think, Rob?
I agree with Michael. I think it's a difficult business. At certain times, you just don't know when the difficulty's coming. So there is almost certain to be events at some point in the future where they'll need to raise capital again if this keeps on going on. You know, but I don't mind the acquisition. I think that they're diversifying their crops areas, and so as they get bigger, as they diversify more, it becomes less risky. So
because it's quite big globally too, isn't it? Don't they do so we can get our berries all year round? They have farms in Europe, Northern Africa, the whole. It's sort of sounds very sexy, but it's all part of the supply chain, isn't it?
It is. They are attempting to make the business less dependent on certain areas and countries, and that makes sense. So I could see that there's going to be stop, start, raise capital, but in 10 years' time, this might be a better business than it is today if they keep on doing what they're doing. I wouldn't want to own it over this period, but it may get a better. If they keep on doing acquisitions like this, it'll become a less worse business.
Right. Okay. All right. So they're diversifying, but. For all of those cyclical issues of Mother Nature, droughts, floods, all that sort of stuff, do you generally steer clear of ag businesses? Would you steer clear of like AACo or Elders, or because it's just a sector that's too uncertain?
Look, there may be a point where they're so out of favour you can invest in these things, but that's once every 10, 20 years. Right, this is a 1 in a 10, 20 year investment where you can make a lot of money. When it's massively out of favour, it's not out of favour enough yet.
Right. Okay. What about you, Michael? Do you tend to steer clear of ag businesses?
We do. We find that sort of most of the smart money in ag tends to be private. We find that the markets don't necessarily have the long-term thinking that an individual or a family might have, and they often struggle to get valued appropriately. I think it was Rural Co or Ag Co, one of the big beef operators. If you look at the land value compared to the share price, the land value is astronomical, but the market's just completely discounting the business value there. So I just think that the market tends to put in the too hard basket. And often you'll get brought these sort of unlisted type agricultural deals from time to time, and that's the sort of avenue that we look at, or we haven't done one in the past, but that's the avenue that we would probably prefer to go down in getting ag exposure.
I remember when Elders came up on the call, it'd be a couple of months back now, and the panel then sort of saw Elders as a bit of an outlier in that regard, because it's almost like an ag listed investment company that has a bit of everything.
Elders is an interesting one. They were on death's doorstep. Well, maybe not death's doorstep, but they were in very deep trouble not that long ago. Maybe a couple of weeks away from going bankrupt entirely, but they've managed to restructure and get all parts of their business doing well. They're very vertically integrated. Same with Costa, by the way. Costa do all the marketing, the packaging, and the farming. So it does sort of reduce the risk a little bit, but again, probably too hard.